Hello and welcome to the show with me, Gillian Gottsell. Now, today my guest is David Packham, who is the CEO of Chintai, which is a digital asset technologies for the capital market. So, David, thank you so much for coming on the show.
Thanks for having me, Gillian.
So, Chintai, I'm saying it, Chintai, Chintai. When you fluff a word, it's better. Do you know why? Because people remember it. Because I'm saying it about 10 times. Chintai, and it's from the Japanese. What does it mean again?
It means lease in Japanese, because it was the very first use case that we actually had as a marketplace.
Wow. Okay. Yep. So you set it up in 2018. You did the white paper, and then you launched a DEX in October of that year.
Yeah, we didn't waste time. Yeah, it was. We were a decentralized exchange is something that it's an exchange that operates completely on this blockchain decentralized ledger technology. Ultimately, it enables people to kind of peer-to-peer trade through a smart app itself, and ultimately for us, therefore, all the activity of the exchange itself appears on the blockchain as well. A lot of these crypto exchanges that people might be familiar with, like Coinbase and so on and so forth, they're actually not decentralized. They're operating just like an ordinary company or a broker would, and most of the activity itself is not even happening on the chain either, on the blockchain itself. So you're buying and selling Bitcoin. They might well have some, held on the chain, but they're frankly just moving numbers around in the same way your bank is. And so this is a different concept. It's more secure, but it's also really embracing that decentralized future that we're all trying to move to.
And I see as well that in your first year of trading, your volume was $250 million.
Yeah, the trade volume was very large, and that was a combination of the underlying asset being worth a lot at that time, which was we were actually trading the computational network power of the EOS network, which is what was one of the larger crypto currencies at the time. I think it was in the top 10 at that point. It's slightly lower now, but again, like all these things, it was a single use case to build out a concept, and then they reformed all the token economics, and that kind of use case disappeared as fast as our market built out. But that was good. It gave us a real opportunity to sort of step back and look at the bigger picture, and what is the real opportunity here that we built something, and that enabled us to step back and really build a cohesive platform for digital assets that handles both issuance and deployment of secondary markets in a really integrated way, embed compliance as a service, and operate that in a slightly different way than has been done before. And from that, that's really where this whole project is kind of sprung up, and we're really going to be about providing it as a software solution that other companies and other clients can kind of white label, and that includes financial institutions as well.
You've hit 3 points there that I was going to talk on later. You pulled them all together. It's a trinity. So it's a digital asset issuance, which is really important. We'll talk about what kind of assets you're issuing. Secondary trading solution, and it's compliant. Because I noticed one of the quotes that you raised some money recently, second round, 7.5 million. Thank you very much. Block One and Cryptology were both the two lead investors. And there's a quote from Block One saying that they love the shared vision of a blockchain-enabled digital asset revolution built on regulated financial services. So you're hitting 3 things there. Tell me, we're jumping here a little bit, but tell me, how important is the regulation?
I mean, I think it's personally absolutely essential for long-term mass adoption. I mean, if you go back to sort of 2016, 17, a lot of hype started to build up in this cryptocurrency area, and everybody in the financial industry especially started to become aware that this blockchain was actually quite an exciting concept for them, because if you rolled it out in any forms within the existing banking system, which is very siloed and is replicating the same things over and over, and the data's dirty, and you've literally got hundreds of thousands of white collar jobs in London and Dublin and all, the rest of Europe and all around the world, they're really just doing that to, in many cases, those jobs are required simply to handle the inefficiencies of the system. And so they got really interested in this technology at that point. And then just as they were starting to explore it and invest some money to start exploring it internally, there was all this hype. You're going to see all these companies rushing in to adopt the technology. The SEC and other major regulators stepped in and said, they started cracking down on these illegal ICOs, which for your viewers not familiar, they were called initial coin offerings, which were effectively, in many cases, they were issuing securities illegally, it was deemed. And a lot of those companies got either heavily fined, shut down, or ordered to repay. So that was the first taste, I think, of the fact that no, you can't completely ignore all forms of regulation, and actually, you need to consider these things. But it meant most of the major potential adopters of this technology took a big step back and said, well, let's be careful with this. Let's understand it better. And they've spent the last 2.5 years really getting to grips with it, I think. And there's some deep understanding in the industry of that. But really what they've been waiting for is a really good quality compliance solution that enables them to experiment with these digital assets. And that can
get their fingers burned.
Yeah, absolutely. But exactly, they have reputational risk to factor in here. They can't afford to damage their reputations. They don't want to sit there incurring fines. So they need a way of doing that. And if you look at public blockchains, these are the ones we've all heard about, like Bitcoin and Ethereum. Everybody talks about the immutability aspects and the censorship resistance, and that's a definite massive strength. You can store information on them in a form that is very hard for anybody else to corrupt, and you can all trust it. The problem with that is that the moment any kind of criminal activity happens, or you want to enforce maybe some segregation of markets and stop maybe me, who's currently US resident, I just say to you, Gillian, do you mind actually sending over these digital assets and buying them for me because I can't get through KYC? Well, on a public blockchain, you can just do that, right? And there's nothing to stop that. That doesn't fit with the needs of industries where you need to be able to put restrictions around those. And it's a bit of an ideological discussion as to why some of those restrictions are in place, but primarily they're there to actually protect end retail consumers. And we started to see that from the ICO boom because we saw all the worst elements of human nature. You saw mass corruption,
they were also
fraud.
Startups. They were startups, in fairness, and they crowdsourced a lot of money. And I think that's kind of a bit of a,
they did. They raised
volatile.
Stupid amounts of money, and in many cases, though, they were exit scams as well. There were people who had no real intention of delivering on the projects or anything. And
I wish I'd thought of that.
I know. Well, I actually had a friend. I remember going to a blockchain show in probably the start of 2017, and he said to me, it is ridiculous. All you need to do is write a white paper, wave it around. You can raise hundreds of, millions of dollars. His instant reaction was, we should do that.
It's very tempting. So with terms with the regulation, you're going for several licenses at the moment. Is that correct? Which ones?
We are. We're going for the RMO, which is the Recognized Market Operator License, and the CMS, which is the Capital Market Service Licenses. So RMO is for operation of an exchange, so secondary markets. And the capital markets one is effectively the issuance license, and we're primarily engaged at the moment with the Monetary Authority of Singapore, and then later in the year we're anticipating engaging the FCA and going for licensing in London as well.
Okay. At the start we talked about digital assets. What type of assets are you tokenizing and digitizing?
Well, over time we'd like to have the capability to tokenize literally anything, but you've got to focus as a business. The core asset classes where we're really finding, I suppose it's client-led demand and industry-led demand. By far, the one that's been biggest is tokenized real estate, which for anybody who's not familiar with what that practically means, the big problem with real estate as an asset class is that it's highly illiquid, and its illiquidity, the fact you can't trade in and out of it cheaply and fast like shares, means that it's substantially discounted versus other asset classes globally. So the ability to actually add that in for the first time is going to be quite a fundamental disruptive game changer for real estate. But also the ability for you to actually just trade in and out small amounts like shares. That's going to be one of the biggest ones. Associated with that is therefore debt issuances, because that's part of also how such markets can be fueled out. Securities, funds, and commodities are coming as well. And then another big one is going to be bonds for sure over time as well. And then there's, outside of sort of those conventional asset classes, you've got utility tokens. Chintai itself has a network token called CHEX, which is a utility token. It means it's not regulated like a security either. But there's listing of those that's all going to be possible too, and issuance of those. But also NFTs, which some of your viewers may be familiar with, which are these non-fungible tokens. We've seen some interesting innovations in that area, but broadly, again, we'll be able to enable dynamic forms of issuance and market operation again for those as well over time.
So when you say May, is there a roadmap on that? Are you what are you doing currently? Are you, with
so
are you doing it now?
Yeah, so the beta of the Chintai industry platform launched this weekend on Saturday. So it launched on the 31st of July. And so, yeah, the very first sort of experimentation with financial institutions has just kicked off in the last couple of days. And that's primarily all around the real estate and debt asset classes at this stage. So it's going to be an exciting kind of couple of months for us. We're very much going to be working hand in hand with them to tailor the product now and add in additional data fields and integrate with our service providers who are handling things like custodial KYC and other forms of client onboarding. But yeah, we're at a real kind of rocket launch phase right now where everything is starting to lift off.
And which markets, which real estate markets are you looking at initially, like London, New York, or?
It actually can vary, and it's varying from client to client. So one of our core clients is also an investor, Chimera Wealth. They're going to be doing US based, and actually so is another company we're working with, Cinder Blocks. They're also US based out of Chicago. So in both those cases, they'll be leveraging our licensing in Singapore, but they will be handling US real estate. But yeah, I mean, broadly, we'll over time be able to handle more and more jurisdictions and coverage.
What makes you unique, or who are your competitors? Maybe both questions.
Yeah, that is a very good question. Because there have been a number of platforms and concepts out there trying to, should we say, carry out issuances and so on and so forth. I see most other types of solutions to date as not integrating both issuance and secondary market deployment in a very liquid way. And we can handle automated market making, which is algorithmic forms of markets too, very specific to crypto. They're very efficient as well. I haven't seen other solutions where they're fully integrated like this, where an issuer operator can effectively configure their digital asset and deploy an instant liquid secondary market. So that's one thing that I think is a core differentiator. But the other comes down to the architectural side of this, which goes back to compliance. In order to enforce compliance properly, you need to operate on some form of permission chain that maybe leverages a public blockchain, and that's what we're doing. And we're building out a global regulatory rules mapping, where we're going to map all the rules across all the jurisdictions. We're doing Singapore at present for the beta. And that's going to enable people issuers to effectively just switch on and decide which jurisdictions they need to be compliant in. And the rules then get auto-enforced at the smart contract level. So we've got the potential here to completely disrupt and raise how regulatory compliance is auto-enforced as well. And that should provide a massive amount of cost savings. But then I think the final differentiator for us is the fact that we're just simply not trying to become the central exchange or marketplace. And so many others, their instincts are tending towards wanting to be the next eBay of digital assets. We're really not about that. I don't fully understand that. I don't think that's a solution that's healthy for competition, and I don't think it's actually what clients generally want. What they want is a technology partner, and that's really where we're focused on it. We're software as a service. They can white label the product fully, be client facing. They're not even going to necessarily know they're utilizing Chintai itself, but that's fine. And we're sitting there behind the scenes, making sure we give them the best service and product.
You can white label a solution. Say I'm a realtor in Dublin, and then you also provide secondary market too as well. So it's an end-to-end service. And
absolutely, and that includes leveraging the licensing too. Exactly, you're right. So a good example of this is exactly as you say. You could be a relatively small real estate broker of some sort, and you could with this product, you'll be able to offer some sort of real estate issuance and operate a secondary market completely client facing for you. And so I hope to actually get to this point where actually ultimately anybody can become an issuer or operator of their assets like this. And I think that over time could be where we go, but we'll need to work with the regulators to get everybody comfortable and make sure the controls are sufficient. But that for me is the end vision here. Everybody can do that, and we all benefit from the network effects element of more and more of this moving on to chains. And it doesn't even have to be the same chain, because inter-blockchain communication is becoming a bigger deal. But yeah, I think that's where this is all moving longer term. And I think it'll ultimately lower barriers to entry. It's going to give people more and more kind of control. It'll decentralize the system. And it kind of moves us away from this unhealthy model where issuance, even things like an IPO, is very expensive. It's controlled by, a very elite, select, small group, and they can charge through the nose for it. And that's never really, conducive to healthy economics.
I was going to ask then, are you on the EOS blockchain, or are you across other blockchains as well?
We're leveraging the EOS blockchain as our primary public blockchain. So we are going to be reflecting the hash onto that for every block too, and that really ensures the integrity of the private chain, the permission chain that Chintai itself is running off. But really, over time, there are going to be opportunities for the industry to kind of shape the governance of that chain. We could decentralize it more and more over time. And we're very open to sort of working with the industry to find the optimal solution there. Right now, it'll be quite centrally and operated, but that has a number of benefits when you're launching a product of this nature. Not least the fact that if any kind of, should we say, criminal activity is found, you've got the ability to stop, freeze the appropriate accounts, and actually recover from that and stop theft, as opposed to these cases where you'll see potentially hundreds of millions of dollars just being lifted in open sight on a public blockchain, and people just shrug and say nothing we can do about it. You're never going to see massive capital inflights in the billions of dollars if that's a risk.
How important was that recent raise? We mentioned the 7.5 million, and what will you do with the money?
Yeah, I mean, it's certainly been a really important milestone for us. It's really unlocked our potential to cease to be capital constrained on any level, and expand out the team. We've been doing a lot of hiring the last few months in Germany, where the dev team is based. Our CTO Phil Hammett is based there. So we're building up a developer hub kind of around there. We're always going the opposite, actually, of the post-COVID era. Most firms are kind of going virtual. We've been virtual for the last 3 years, and we're actually taking some office space now to sort of have the team able to work together. But yes, beyond that, it enables us to ensure that we've got everything required to attain licensing in Singapore, and expand beyond that. As well, it provides us with the sorts of resources we need for marketing, PR, but also to service some of the really, really large financial institutions. If you've got, for example, an asset manager maybe with $500 billion of assets under management, and it says, yeah, we're interested in your solution for doing some tokenized real estate. Well, fantastic, but we as a company need to be able to provide them with a grade A service and make sure that we can
move fast,
support.
Yeah,
absolutely. So that's really what this has done. So yeah, we're definitely feeling good, but we're not complacent. There's a big focus at this stage on execution and starting to really convert the company from, I guess, what you would call pre-revenue to revenue generating at this crucial stage.
Where are you? Where are you on your roadmap now? Whereabouts are you, and what's going to happen next 6 months, 12 months?
So the next 6 months, it's very much going to be about scaling up now. The beta program and bringing in more and more companies, and then once they're happy at a certain point, the entire network goes live on the crypto side as well, crypto facing side of things. And at that point, with licensing attained as well, we're literally hitting the point of the first live issuances and markets deploying. So that's going to be a big thing that happens over the next 6 months.
Over 6 months, okay, yeah.
Yeah, so that's really between now and the end of the year where we should be seeing all of that coming online. That's quite a fundamental change at that point, because you've got licensing responsibilities, you've got live active markets, trade, issuances, clients, compliance needs. You've got a variety of partners who are handling custodials and other types of services as well. So yeah, it's definitely going to be a wild ride next 6 months, I think. Yeah.
If people want to find out more about you and your business, where's the best place for them to go?
I would say our website's always a good start, which is www.chintai.io. So that's CHINTAI, and then Chintai Chintai Network is our Twitter handle as well.
Perfect. Well, thank you very much for your time today, Dave. It's been fascinating. Chintai, I'm so glad I mispronounced it several times so I could spell it. CHINTAI. Thank you very much indeed for your time.
Thank you, gentlemen.